Is Bitcoin in a bubble and will it pop? Well, in this video, I'm going to answer that question by diving into a brief history of the previous stock market and economic bubbles, so we can learn from history and actually not lose money and may actually be able to make money from these economic bubbles, because this is not a new thing. These have been going on for hundreds and hundreds of years. So this is going to be a really essential video if you plan on doing any investing into the stock market or any other asset class. So a vital video for you guys to watch all the way till the end, and believe me, you will not be disappointed. But before we get right into it, guys, if you're new around here, feel free to join the investing family if you do want more investing tips and exclusive stock market picks, which I'm personally investing into. Just go ahead and hit that subscribe button and turn that notification bell on. And remember, guys, if you do find any value in this video at all and you appreciate all the research which has gone into it, feel free to give this video a big thumbs up. That helps out tremendously with the channel. And if you do want to learn how to become a better investor, then why not check out that first link in the description below for our ultimate investing course and also our VIP membership group, which is only the price of a coffee. And with that being said, let's dive in. What is an economic bubble? Bubble is an economic cycle that is characterized by the rapid escalation of market value, particularly in the price of assets. This fast inflation is followed by a quick decrease in value or contraction that is sometimes referred to as a crash or a bubble burst, and we've been through plenty of them before. So basically we have a hype train, and when that hype train crashes, then it's all over. Why are bubbles formed? Well, one word is greed. So psychologically, people do get greedy, and there's also FOMO, so fear of missing out. We hate seeing other people around us making money faster than us very, very easily, and that tempts us to do whatever they're doing to actually make the same amount of money. And this basically is a psychological attribute of human beings which forms these economic bubbles. And this makes complete sense. Let's say you're working in some sort of office. Your friend comes up to you one day, he says, oh, I've just put 5,000 into Bitcoin. Let's say this was last year. And you said, oh, you're crazy. That popped last time. It's going nowhere. That's a waste of money. The next week he comes in, I've just made 10,000. Next week he comes in, I've just made 20,000. Next week he comes in, I'm quitting my job. See you later. I'm going on vacation. You're going to feel so stupid for not actually listening to him the first time, and you'll be tempted to jump in. But usually at that point in time, when you jump in, that's usually the point when the bubble bursts. So this basically is herd mentality, or basically just being a lemming. We've got a herd of animals here running off to the edge of a cliff. And here there's a little note. I don't know where we're going, but from the look of this crowd, it's got to be good. And that's what people tend to think. People tend to think they must know something I don't. Everybody's crowding around this certain asset class. Let's say it's Bitcoin. Let's say it's something else. It's basically how we learn from being a child. We watch other people and we copy them and we imitate them. But that can be really dangerous when it comes to the stock market and economics. This brings me on to the brief history of stock market bubbles. So the first recorded bubble was the Tulip Bubble, and this happened in 1637 in the Netherlands. So tulip mania was a period during the Dutch Golden Age when contract prices for some bulbs of recently introduced and fashionable tulip reached extraordinarily high levels and then dramatically collapsed in February 1637. So this is not a new thing, these bubbles, guys. This has been going on for generations. People were paying upwards, wait for it, guys, of $1 million for one of these tulips, which was just crazy. And as we can see here, the bubble went up, and like many bubbles, it crashed down massively. So there was a rapid escalation in the asset price, which was these tulips, which were actually rare at the time, as I believe they were imported in. Bubble number 2 of my list is the South Sea Bubble, and this happened in 1720. Now, the interesting thing with this bubble is one of the greatest thinkers in history, one of the most intelligent people in history, Sir Isaac Newton, actually got caught up in this bubble and lost a lot of money. And this is proof, really, that to actually get caught up in a bubble and to lose money in a bubble does not mean you're stupid. It's just part of the human psychology to actually jump in to these bubbles. So South Sea Stock was basically a shipping company which was given this monopoly on the rights to actually import slaves, I believe, from the South Seas, which was some islands in South America, I believe so. And basically, there was a lot of exuberance behind this stock. Many people were jumping into this stock. Newton, Isaac Newton's friends, were making money in this stock. So as you can see here, here's the chart. Newton invests a bit. Newton exits happy, so made a little bit of money. He was actually smart there. Newton's friends start getting very rich. Then Isaac Newton re-enters with a lot more money just before the peak of the bubble, and then boom, the bubble pops, and then Newton exits broke. So he bought high and he sold low, the exact opposite thing you're supposed to do in the stock market. And Isaac Newton quoted to have said, "I can predict the movement of planets, but not the madness of men," after losing his major gains. And no, guys, South Sea stock is not available on Robinhood. So sorry, guys, you cannot invest in this stock right now. I know many people are like, oh, that sounds like an interesting company. It's got monopoly. No, sorry, guys, you can't invest into that stock right now.
Stocks only go up. Stocks only go up.
And on to bubble number 3 is the Japanese stock market bubble. And this happened during the 1980s, when basically the media narrative was that Japan was going to take over the world and overtake the United States. So we had Toyota, we had Nissan, we had Honda, we had Nintendo, all these cheaper imports coming in from Japan and actually taking market share from many companies in the West. So this was the Japanese bubble here. So this is the Nikkei 225, which is basically the main stock index in Japan, similar to the S&P 500 in the US. And as you can see, it reached 38,000 points in 1989 and then crashed down. And wait for it, guys, it's still not recovered. So many years later, this chart only goes up to 2017, but even today, it's still not recovered. It's gradually climbing higher. So I do believe Japan is probably undervalued right now. We call this a lost decade in the stock market. Then on to bubble number 4, we have the dot-com bubble, which happened in 1999. This is a really interesting one. This is the internet bubble. And this highlights a key characteristic of economic bubbles, and that's every economic bubble starts with a nugget of truth. As we know, the internet did change the world, but that didn't mean people didn't lose a lot of money on internet stocks. In fact, many of these internet stocks actually went broke, and many companies were actually going public with just the word internet in their name, a really shabby business plan, and they were actually gaining millions of dollars in funding. Even established companies were adding .com on the end of their name, even if their business was nothing to do with the internet, in order to increase their stock price. And wait for it, guys, it actually works. So in the short term, if a company had .com at the end of their name, their stock price actually increased. But then, of course, like all bubbles, it popped again. So as you can see here, this is a really interesting one. So stock of the globe.com goes public and soars 606% that day. Now that's crazily high numbers. And there's a lot of what Warren Buffett would call wealth transfer happening here, but not wealth creation. On to bubble number 5, this is the housing bubble of 2008, which was characterized by a rapid escalation in the prices of houses. Again, key characteristic, it started with a nugget of truth. We all need somewhere to live. Housing is a vital thing which people need, but that doesn't mean we can't have a housing bubble. Now, more specifically, this was caused by what's called collateralized debt obligations, or CDOs. And basically, this was a collection of bad loans. Thus, banks were borrowing to people with no income or no credit. And what they were doing, they were putting all these bad loans into a basket to diversify the risk. However, it didn't really diversify the risk. And these CDOs, which were traded, were actually AAA rated by all the credit agencies. And that was the major risk. So people actually thought that they weren't taking risk when really they were taking immense risk. And of course, this resulted in the collapse of Lehman Brothers and a major financial crisis. If you guys have watched the movie The Big Short, that will explain everything you need to know about this housing bubble.
They call me Bubble Boy. Triple B's, 0. And then that happens.
What is that?
That's America's housing market.
On to bubble number 6, and this is Bitcoin in 2017. So there's no doubt that this was a bubble. I actually got caught in this one. So 2017, I wasn't as experienced as I am now in actually trading in the stock market, but like Sir Isaac Newton, I still got caught in this bubble right here. So I remember reading about cryptocurrency. I got very excited about it, Bitcoin, all that sort of stuff. I got excited during this time, and I was investing into the market heavy. I made a bit of profits, very similar to Isaac Newton. I cashed out a bit. I thought, that was quite easy to make that money. And then I saw the crypto, it kept rising and rising and rising. It got to $20,000 of Bitcoin, which was a lot back then. And I actually got in again. And just near the top here, the bubble popped, and I was like, oh my God, they just went. But what I did, which was different than Sir Isaac Newton, is I didn't sell. I just said, okay, it's not a massive amount of money. I'm going to just leave it in there. I don't care. I'm going to leave it in that account. Whatever happens, happens. It's a long-term play. I left it in there, and it basically just stayed there. And then I watched the news. I saw cryptocurrency prices were rising again. So it started going back up in price as many institutions, Square, PayPal, started investing into crypto. And so basically I sold out. I still managed to actually get a profit on that original investment. But don't get me wrong, guys, that wasn't the plan at all. I actually got caught in this bubble here. I just left it in there, and then I got lucky and managed to just sell out here again. But what I did do is learn from that situation, and I didn't keep my cryptocurrency all the way up here to the top here. I didn't keep it there. Yeah, I could have made these gains here. I could have traded this, and I'm going to talk about that later, how to actually trade bubbles. But I decided to just sell out around this point here, which was good enough for me. I made enough profit. So on to bubble number 6, and we had Pandemania, and this was in 2020. So this was a really interesting one because we had a stock market crash which turned into a bubble. And I've not seen that before in history. And as the old saying goes, history doesn't always repeat, but it does rhyme. So it's very similar to history, but also something new, which we'd never seen before. And this is basically what you get when you get $1 trillion stimulus, plus people stuck at home, plus free trading apps. You combine that all together and you say, go hit the stock market, and you get an inflation in stock market prices. We had SPACs, which were just popping every week. We had GameStop, and the stock market was at all-time highs when the economy was in tatters. And now we're seeing Bitcoin reach all-time highs again. So could we be seeing another Bitcoin crash? I said there's a lot of irrational exuberance in the market, and we do see the price of Bitcoin falling massively at the moment. Will it continue to fall? Who knows, but it has fallen a lot recently. Elon Musk actually stopped Tesla from accepting Bitcoin payments due to the environmental effect of Bitcoin, which I covered in a past video a few months back. I basically said Bitcoin mining uses more energy than Argentina. Yes, the country, Argentina. And here's the chart of a bubble, which I want to show you guys. This is extremely interesting. This is probably my favorite poster of all time. So we have the smart money here. They get in the early stage. We call this the stealth phase. So when nobody's talking about a certain asset class, it could be Bitcoin, could be internet stocks, could be EV stocks, SPACs, whatever it is, they get in early. This is the stealth phase. Then there's awareness phase where the first few people start to hear about it. They start to jump in. Then we get to media attention. Now, I've got a rule which I live by. Once it's on mainstream news, I usually sell, because then I believe there's optimism is already baked in to that share price. And then we get to the mania phase. So we have enthusiasm, we have greed, we have delusion, we have new paradigm. I think this was the top of the Bitcoin bubble in 2020. Denial. If I'm looking at this chart right now, it looks like we're at a bull trap right now. So we've had a decline after Elon Musk's tweet. And then it has actually, few people have bought back in. So this could be a bull trap. So we'll find out, because after there will be fear, capitulation, despair. Might not happen. It might just go straight after this. But there could be this part here, which is the blow off phase of the bubble, where we have fear, capitulation, despair. Now, the key thing is, obviously, if you do get caught in one of these bubbles, know where you are in the cycle. So if you're here and you know, right, I'm in the bubble right now, then you know it's a good time to sell. Of course, you sell at the top, buy at the bottom. That's usually the best thing to do. So here are my 4 rules for actually spotting if you're inside a bubble. The first is a rapid escalation in asset prices. The second is rapid exuberance in the market. So it's just basically come out of nowhere. There's all this exuberance behind the certain asset class. The third is greed and FOMO, which is in abundance around the certain asset class. It could be Bitcoin, it could be EV stocks. The fourth is the nugget of truth. So all these bubbles start with a nugget of truth. And to me, that's the really difficult thing for people to get their heads around. So can you actually make money in bubbles? Well, yes, you can make money in bubbles, but most people will lose money. And this is the difference between wealth transfer and wealth creation. So if you want to try and be smart about it to actually make money during one of these bubbles, and you can make money during the bubbles, is you need a momentum trading strategy. Basically, you need to take profit and sell as the stock climbs. You need to use a trailing stop loss. And as the price of the asset goes up, you need to keep trimming, taking profits, all the way up. Keep your position size small and diversify massively. And believe me, guys, you need to watch those charts heavily. You need to know what everybody else is doing. And like Sir Isaac Newton says, it's very difficult to predict the madness of men. But here's a quote I prefer to live by, and that's: be fearful when others are greedy, and greedy when others are fearful. So during a stock market crash, that's when I like to buy. Stocks are on sale. During a stock market bubble, that's when I like to sell. I like to sell into that strength. And that's by the legendary Warren Buffett. And here's another great quote by Warren Buffett: and the best investment you can make is in yourself and in your own learning, as the more you learn, the more you earn. And if you guys want to learn how to become a better investor, why not check out our Ultimate Investing course? So you get access to our private Discord group, of course, which is also available in our VIP membership group. You get access to my advanced valuation models, my stock research platform with over 46 different stocks, and of course, bonus, my 6-figure portfolio updates, a stock portfolio tracker, and of course, 12 course units on how to become a better investor. So if you do want to find out about that, I will leave for you guys a coupon code in the description below. It will only be valid for the next 48 hours of this video being released. Thus, if you do want to learn how to become a better investor and become financially free and change your life for the better, then feel free to check out that first link in the description below. With that being said, I hope you guys did enjoy this video. Remember guys, if you haven't subscribed, feel free to hit that subscribe button. If you did find value in this video, feel free to give it a big thumbs up. And with that being said, I hope you guys have a tremendous day, and I'll see you in my next video. Invest safe.